everyone. Today, our group will bring one of the successful case M&As in the history, Microsoft's equations LinkedIn. And our group will have 4 members today. And are you question about the 4 member? So let's meet her now.
Hello everyone, I am Huynh and today my group will present one of the most fascinating technology M&A cases in recent history. It is the Microsoft acquisition of LinkedIn. I would like to ask you a question. If a company reported a net loss of 166 million US dollar, would you pay 26.2 billion USD dollar to acquire it? Most investors would probably say no. But in 2016, Microsoft did exactly that. To understand why, let's first look at LinkedIn before the acquisition. Founded in 2003, LinkedIn became the world's leading professional networking platform. Although the company experienced strong growth in 2013 and 2014, its momentum began to slow afterward, raising concerns about its ability to sustain long-term growth independently. Still, LinkedIn was far from failing business. In 2015, it generated nearly 3 billion US dollar in revenue, but also reported a net loss of 166 million US dollars. The question was therefore not whether LinkedIn had value, but whether it could continue growing on its own. Then in June 2016, Microsoft surprised the market by offering 26.2 billion US dollar in cash, or 196 US dollar per share, presenting a 49.5% premium over LinkedIn's market value. Naturally, many people wondered, why would Microsoft pay such a high price? And what was Microsoft the only one company interested? The answer is no. Microsoft faced strong competition from Salesforce, which saw LinkedIn's professional network and business data as a strategic asset that could strengthen its CRM ecosystem. Salesforce pursued LinkedIn aggressively, and its competing proposal eventually reached a notional value of approximately 200 US dollar per share. However, LinkedIn's board favored Microsoft's on-cash offer because it provided greater value certainty, lower execution risk, and a higher likelihood of closing successfully. In addition to its higher on-cash offer, Microsoft promised to preserve LinkedIn's brand, culture, and independence, with CEO Jeff Weiner remaining in charge after the acquisition. The transaction was announced in June 2016 and completed in December 2016, becoming the largest acquisition in Microsoft history at that time. From an M&A perspective, this deal is classified as both a related M&A and a product extension M&A. Both companies serve professionals and enterprise customers, but with complementary strengths. Microsoft brought software and cloud platforms, while LinkedIn contributed a global professional network and valuable user data. Together, they created a stronger business ecosystem and supported Microsoft's broader growth strategy. So when our group analyzed this case, we focused on 5 key questions. Why did Microsoft need LinkedIn? What synergies and risks came with the deal? Was the acquisition financially successful? How did Microsoft overcome regulatory challenges? And what lessons can future technology M&A deals learn from this case? These questions will guide our analysis throughout the presentation. And with that, I would like to hand over to Mr. Thinh for the next section. Thank you.
So let's talk about what the deal between M&A Microsoft and LinkedIn happened and why LinkedIn is special. First of all, we want to answer why M&A add-on. So we know that Microsoft was to compete with Google and Amazon. That's the key competitor of the Microsoft. But Microsoft have the zero presence on the social professional networking. So buying the LinkedIn is faster than building something. The second, what LinkedIn actually gave the Microsoft, that's what the instant access in 3 things. A professional social network, a professional identity layer, and the data-driven platform ecosystem. So 3 access Microsoft could never build organic in time. And the third, that's the strategic motive on the boss side. Microsoft bring the professional graph, the productivity ecosystem. Microsoft can expand the CRM and cloud acceleration. LinkedIn bring the capital access, the global scale, and the internet channel, and can assess the technology ratio from the Microsoft. So each side needs what the other side had. The last one, that's what the theory behind, based on the Bromance 1982 concept of related diversification. Explain this. Microsoft and LinkedIn share a B2B customer base. So this is the random, related move. To explain this, we use two framework that's called VIO and SWOT. So the first one is VIO. Let's start with the question, why LinkedIn and not for the other company? We use the simple framework. VIO, the first is valuable. So LinkedIn has the team of data scientists that every tech company wanted. The second, rare. LinkedIn have over 400 million verified professional profiles, and no other company have the data set like this. The third is inimitable, which means hard to copy. This network took the years to build of LinkedIn, and even with the money, the competitor cannot easy to copy in overnight. Four, about often forgotten, organized. This not enough to just on the good asset, you need to use it well. Microsoft plug LinkedIn data trend into the product stack to go to head with the market leader CRM. That's called Salesforce. So VIO tell us LinkedIn wasn't just the company with the user, it was the rare that has to copy, and Microsoft have the machine actually to use. That's exactly what we counted in the real synergies, sharing both the data and the talent, not just two companies sitting side by side. The next framework we use to analyze that we call SWOT. For the trend, two companies complete each other. Microsoft bring the distribution and LinkedIn bring the data. So these customer based on the real overlaps. The cost to reach new customer of Microsoft when they acquire LinkedIn is very low. And Microsoft based on in cash, no debt. That's the good advantage for the Microsoft in this deal. About the weakness, let's be honest, LinkedIn was losing money before the deal, around $165 million a year. And Microsoft on the track record of integration is mixed. Remember the Nokia, which failed before. About the opportunity, this deal opened the new path, CRM expansion for the Microsoft to expand the new market. LinkedIn data also boost the Microsoft, the other product like the Office and the Dynamics. A return. Not every company want employee using the social network at work, and Microsoft still compete with the Google and Facebook for the same kinds of data. So there's also something important. The trends were real, and we have the risk, and the interaction was real also. So that's the key link to our next point. Microsoft avoids Nokia mistake by choosing standalone integration target integration, not the full integration. So that single choice is probably biggest reason that make this deal work. And next, we analyze about the synergy and the risk management. Let's Ms. Phung present.
Okay. Hello, everyone. I'm Phung. I will continue to analyze the synergy. So to deep dive and analyze about the synergies, I will combine two theories. The first one is Ansoff give us the outcome test that the combined firm will create more value than just the one firm standalone. So the formula above the slide was not proof whether the deal was a success or not. It depends on the relatedness. So about the relatedness, rumor theory gives us the source of that value. So related diversification can create more value when the useful stocks is shared across the both business. So it means that the more related and the share stock about from across the both business, the stronger synergies is. And so in this case, you see that the relatedness comes from the serving the same B2B customer across the connected workflow. So LinkedIn bring their professional graph with to increase the Microsoft CRM and product productivity product, while the Microsoft expand the linking through the cloud capability and the enterprise distribution. The two-way reinforce create a very powerful and a very potential synergies ecosystem. So in detail, what kind of synergies is, we come up with the next slide for first first is about the revenue synergies is come from the dynamic 365 and the cell navigation bundle is very potential key driver for the revenue, which is Microsoft use the linking inside to upgrade the CRM, the Office product, and then cross-selling through the enterprise distribution. The second, the capacity synergies combine the LinkedIn professional craft with the Microsoft workflow technology to support their new CRM, the recruitment, and the AI solution. So this innovation and the future revenues is the very strong base for the acquisition. And the final, the potential cost synergies come from the advantage of the both business, including the cloud infrastructure and engineer, the enterprise distribution, and the talent solution that allow Microsoft and LinkedIn lower their unit costs. So as the result of the three synergies in 2021, we see that the number of numbers on LinkedIn strongly increased by 1.8 times comparing to it before the acquisition, and then partly lead to the 3.4 times growth in the revenue in 2021. It's very impressive number. But the synergies is kind of the promise, but what if the Microsoft bet for something that the kind of the synergies is not going to happen, because there are so many risks out there that can take the loss, like the acquisition case of the Nokia. So 26 billion is not just a small number. The M&A between the Microsoft and the LinkedIn in 2016 create the various controversial topic, most of about the overpayment, the role hypothesis once that the managers may overestimate their capability and pay too much. Just like the number you see on the slide, the 48% premium that showed, and also the 16 billion goodwill at the warning signal. So the Microsoft therefore need to independent valuation, the very clear investment return target, and the annual goodwill review. And the cultures is also create another risk. Just imagine Microsoft is kind of the very strict, very old man, and LinkedIn is very, very dynamic. It's very a big gap in the culture. So based on the theories, the strategic mode, the symbiosis mode fits because the LinkedIn need Microsoft technology and distribution channel, but also independent to protect its brains and cultures, and also the automaticity. Okay, finals, there are two more very critical risks, including the privacy and regulation could limit the integration. So as you may know, in 2024, LinkedIn had exposed to reuse the member data without valid legal reason that led to the 310 million fines and lost the trust. The fines were not caused by the acquisition, but show it's the legal and the trust. Risk in the professional data control require the valid legal reason and the minimum data collection. So they also have the very important in the condition with push Microsoft to sign the 5-year EU competition condition to protect the user choice. So after all the synergies, you may wonder about the finance impact. So that I transfer to my team.
Okay, hello everyone. So now let's look at the financial impact of what's become of one of the most significant technologies M&A of this decade. So far, we focused on the LinkedIn performance. You can see from just 5 years after the M&As, the revenue grew 4 times. And it happened the same with the membership from around 433 million in this year happened M&A to 1.3 billion in 2025, just like 9 years, and the membership is like 3x growth. To answer to the question, like, okay, so how about the Microsoft? It is acquisitions like create the value for the shareholders. Microsoft, we don't choose the revenues to look at it. We choose the EPS, the earnings, the EPS, the earning per share. So why we choose the EPS? Because the EPS measures the company profits on a per share basis, so making it a better indicator of whether the acquisition create the value for the shareholders. Immediately, but we can see like 1% decrease immediately of the year after the M&A. So is this the bad signal for this M&A? No, because like this decrease because the intangible assets amortizations not come from the revenues. And for the EPS from fiscal year 2016 to fiscal year 2021 is around 4 times, from $2 to around $8. So moving, and one thing like one factor to prove this success case, the success M&A case, is the market confidence. You can look at the stock price from the years 2016. This is the year happened the M&A. It come from 56 to 150. This number is show the power of the market confidence when the investor they believe this M&A is a successful decision. Okay, so no matter what happened with the financial impact, in the end, if we want to make the M&A happen, it have to resolve the legal. So, so moving to the regulatory and legal environment. You may wonder why this acquisition require approval from regulator outside the United States. Both companies, they have a headquarters in US, but they have to wait the approval from many countries outside the US, like the Canada, Brazil, South Africa, and especially the European Union. The European Unions, they have to they face to the they have to see the core concerns. The first concern is the antitrust, and the second concern is the privacy concern. So they have to deal with the EU to overcome to meet the remedies like for 5 years. The first is the interoperability to keep office in API asset open to rival professional network. Second is the user choice. Original equipment manufacturing massive window with a LinkedIn pre-installed, and user can uninstall it freely. And final is the data access, guarantee competitor access to Microsoft Graph, so rival can still build a competing app. So the outcome when they miss all the things is EU, they conditional approve on 6 December, and the M&A is official closed 2 days later.
Almost predict the real outcome. The first one is role and relatedness. So first, the product extension. This is the product extension deal because Microsoft moved into the related field, not just the random ones. LinkedIn after acquisition sees only 4.8 contribute of Microsoft revenue stream, and even though it's success, this still a strategic and not the game changer. Second is about the synergy. Synergy combines the company being in the related field. On the tangible side, Microsoft leverage the others and exist the general sales. On the intangible side, more important, LinkedIn bring the data, the talent, and the brand value into the Microsoft. The third is integration and valuation. So this is the most interesting part. Same company, same buyer, but two different integration choice, leading the opposite result. With LinkedIn, Microsoft choose standalone integration and target integration. That's keep independent, connect only where this makes sense, and the market is related positive. So why LinkedIn acquired to the Microsoft? What is the motive? Finally, the motive behind the deal for survival. Microsoft needs to sit in the social network, and Microsoft also have the cash flow side. They have the capital already to deploy the new market. The empire building risk are quite to grow to make Microsoft grow bigger. That's the question. This case can leave the answer. So in short, this case shows that's M&A theory, relatedness, synergy, and the integration level. This not just the academic. This about how use the academic, use the theory to predict the market response for the real business. Thank you for listening.
Okay, thank you everyone. So is there any question?
I think that's, I just have two questions, simple questions for you based on your presentation. Can you share about the key factor behind the scene? One big part, they have a decision about M&A. Yeah. I know that they have tried to increase revenue or something like that, but I would like to understand more about the factor behind the scene. Leading the trend in the future, they already have a recognition in I to explore about their services. It's the first question. The second question, you can share about is it a pro and cons for the recognition? Is it an M&A activity for one of the
Sorry, could you explain more about the second question?
It's the pro and cons. It's really the opportunity can reach when they have a recognition or the M&A activity from the big corporate.
Okay.
Okay, answer the first question. What is the key driver? What is the motive that make Microsoft by LinkedIn acquisition with LinkedIn? So we share that. We know that the key competitor head-to-head with the Microsoft in right now is the Google and Amazon in the cloud platform. But Google and Amazon have the presence in the social platform, but Microsoft have the zero presence. So acquiring LinkedIn is the advantage move for the Microsoft to enter in the new market and to compete with the key competitor. That's Google and Amazon. That's the first question. The second.
And one more factor to decide this M&A happen because Microsoft want to acquire the membership of LinkedIn. That's a strategy for long term. Long time ago, like around 2015, they target to the member to create the data to develop the AI. For now, they use the user power from 1.3 billion to train the Microsoft 369 and name it the AI, the Copilot. You guys can use it for now.
So for the second question, it's about the pros and cons of this M&A case. So we have the first pros is about when Microsoft acquired LinkedIn, Microsoft have the access to the largest professional network that can help them to buy and expand their product, and also to integration with the ecosystem of the LinkedIn. We right now we see that we have the kind of the LinkedIn learn with LinkedIn and some like of the tools from Microsoft that integrate in the LinkedIn website.
Like the Outlook, so access in the Outlook, you can see the title, the position of the other ones due to the LinkedIn, link to the LinkedIn.
So for the cons, I already share about the risk management. But one thing that I see the most interesting is about the conflict in the cultures. Because like I said, just imagine Microsoft is just like the old man. It's very strict, very cultural. But the LinkedIn is kind of very flexible, very socialized, and very dynamic girls. So the very big gap between them. So that's why the kind of the choosing the integration mode like targeting integration that help the LinkedIn to keep the core team, to keep the culture and keep the brain while acquiring an integration with the Microsoft technology.
Okay, thank you.
Thank you, Tracy.
I see your presentation is quite well written. The real model is interesting, but for real model, you guys treat the whole LinkedIn as one resource, and you analyze across different dimensions of it. It would be usually better if you break it down, right? Because LinkedIn has a lot to offer. Microsoft uses it differently across its products, right? And so each of the components is supposed to be separately, each resource and capability should be analyzed across all the components. So if you go to Brio, you have each of the DRIO is a different component of LinkedIn. And so you don't evaluate the same resource across all of them, which should be better. That's interesting. And you also mentioned a little bit about one of the biggest acquisition, tech acquisition. Yeah. I think it's definitely one of the biggest, but there have been bigger ones.
Yes. Just one of the largest. Yes.
I think Meta acquired a lot already.
Yes.
The
Instagram.
X, right? Twitter and stuff like that.
Thank you.
Thank you.